Welcome to another S&P 500 analysis. Today is May 28, 2022. Is this week rally is real or is just a dead cat bounce? To answer this objectively, we'll look at the market sentiment, market internals, and the price action of the S&P 500 and the other major market indexes and see what they are telling us. Stay tuned. Before I begin, I need you to smash that thumbs up to help me promote this video on YouTube. And if you are looking for an unbiased view on the market, then click on the subscribe to subscribe to this channel. And be sure to click the notification icon to turn on notifications so you won't miss any of my future videos. Now let's start with this weekly chart of the S&P 500. Last week, the S&P 500 had a 283-point range and also gained 257 points or 6.59% for the week after it had experienced 7 consecutive down weeks. It booked a 7-week one-time framing down and closed above the February 21st pivot low here. The 10-week and the 40-week is still sloping down, and the price is still making a lower low, lower high, and lower low. Until it could get up to this March 28 pivot high, the weekly trend remained to be down. Now let's take a look at the sentiment. On this sentiment chart, as you can see, the VIX is still inside of this 20-30 zone. So the market participants are still relatively fearful, but it's not as fearful as in the past couple of weeks. And it is coming down. The VIX is coming down. So that tells us the market participants' fear is diminishing. And also the put-call ratio has also been coming down from above 1. And right now it's sitting back down near the 0.75. So the market participants are also considering getting back on a little bit of a risk on. And for the internal, the up-down volume in the last 3 trading sessions has been up, so it's very positive for the market. In addition to that, the daily advanced decline also been quite strong, and that tells us that there is bought market participation on the last 3 sessions with those strong rally. And here on this new 52-week high, 52-week low chart here, we see in the New York Stock Exchange the last 2 sessions, there were more new 52-week high than 52-week low. So that's quite of a change. Remember back here when we saw the number of stock that make new low was over 1,000. And today it was only 36. Comparing to the number of stock making new high, it was down here in a single digit, like 3 down here, and today it was actually 89, and previous day it was 91. And also looking at the New York Stock Exchange cumulative AD line, remember we was talking about this positive divergence here, with the S&P 500 making new lower low, and the AD, the cumulative AD line is actually making a higher low. And today, this week, it actually came above and took out this pivot high here. So the S&P 500 have come back in, and we saw the positive divergence flagged by the cumulative AD line. And for the NASDAQ internal also showing some strength and bought market participation. Looking at the up-down volume ratio here to the last 3 sessions, it also was positive. On Wednesday, it was 3.78 to 1, and on Thursday, it was 4.9 to 1, and today, it was 4.2 to 1 in favor of the up volume. In addition to that, the daily advanced decline also came up. Also, the daily advanced decline was also showing a lot of strength and also showing bought market participation. On Wednesday, there were 1,931 more advancing issue than declining issue. And on Thursday, it was 2,284. And Friday, it was 2,907. In addition to that, also the new 52-week high, 52-week low is improving as well, although it did not turn positive, such as the New York Stock Exchange. But as you can see, the number of stock hitting new low in the NASDAQ on Friday was only 112, and a week ago, the high was 1,711 issue, make new 52-week low. And today, there were 49 stock making new 52-week high. Versus a week ago, we saw only 10. And similarly to the New York Stock Exchange, the NASDAQ cumulative AD line was also showing a positive divergence. So we're basically waiting for that to get resolved. And this week, it came up and took out this pivot high, so that got resolved on the upside. So overall, the sentiment are improving, although the VIX is still in the 20-30 zone. But market participants' fear is starting to come down, and the put-call ratio also been coming down, showing market participants are starting to get back to risk on. And the daily events decline is showing broad market participation in a recent rally. And the worst of the correction might have passed as the number of stocks make new 52-week low is diminishing. And the positive divergence from the cumulative AD line was also resolved by the index on the upside. That is a positive. Now let's take a look at the price action of the indexes, starting with the S&P 500. As you can see, as of Friday, the S&P 500 closed only down 13.7% from its all-time high. So it is back in the correction territory. It briefly went down and lost a little bit more than 20% last week, but it popped right back up. So right now it is still in a correction territory, and you can see that it came down and tagged this 38.2 retracement level somewhere near the 3,815 and got a nice bounce off of it. So right now, we also remember last week we were talking about this pivot low, this 4114.65, and pay attention to this pivot low. If we could take out this pivot low, then we could see this thing move higher. And right now, I'm essentially expecting it to continue to move higher and possibly come up and take out this pivot high here, which is somewhere around 4637.30. So I'm going to be watching to see will the price come up, maybe get a little bit of a check here and then push up. Essentially looking at this trend line here to see what if we're able to break this trend line, come up to this pivot high. So that's what we are looking at for the S&P 500. Now, I'm not saying that it's going to do it all in 1 week, right? So we basically could see a little bit of a back testing here at somewhere around 4,050, 4,060, and then push back up to this level here, somewhere around 4,300. Then we see it push into the 4,400 level in the coming week. Next week is a short week. It's only a 4 trading day because of Memorial holiday on Monday. And for the NASDAQ 100, you see the NASDAQ 100 is still in a bear market territory, even though it had a nice strong week and still down a little bit over 24% from its all-time high here. Now, it did come down and got a nice bounce here near the 50% retracement, 11,768, and it bounces back up. So right now, we're basically looking at this 38.2 retracement level at 12,947. See, would it be able to get back above this? And if it does, then we could watch this NASDAQ 100 possibly make a move up toward this 14,000 level. And we're basically watching this level here. And this level, this pivot high, is somewhere around 15,265.42. So if we could take out this pivot high, then we could start looking at the possibility of the NASDAQ 100 coming up to test these high up here. And for the Russell 2000, as you can see, it did its major move down here on this consolidation of this balance area, or this bear flag, whatever you want to call it. And what I'm going to do now is going to remove that, and then we just focus on the price action here, that it came down to this 50% retracement, somewhere around 1712, and got a nice bounce back up to the 38.2 right now, sitting near the 1888. So once again, we'll see, would it be able to come up, get above that 38.2 and push us up to this trend line here. And if they get above the 2000 level, then we'd be watching at this level here, this pivot high here, somewhere around 2134. And if it retraces back down, then we're basically looking at this 50% retracement back to, back testing this area here, the 1712. And for the Dow Jones Transportation, right now it's still slightly under, more than 20% loss from its all-time high. It is still officially in a bear market, but it had a nice week. It got an inside week candle here, and got a nice bounce back up above the 38.2, 13,752. So right now, we're basically watching to see would it be able to come up and continue to push up to this 15,705, essentially near this pivot high here. And also we're basically looking at this trend line. So see would it be able to break above that. And once it does, then we'd be looking at this 618 or this 16,676 level. And here's the Dow Jones Industrial. And let's just take a look at here from the low here, or even the previous week low. And we see this low, it's only 17.14% from the all-time high. So it never got into a bear market territory. And this week it closed, it's only down 10.16% from this high. So you can see that all the indexes that we have looked at so far, relative strength-wise, the Dow Jones Industrial show the most strength. And right now, we're basically looking to see will it be able to continue to move up and come up to this trend line here near 34,612 and possibly break that and take out these pivot high here. This level here somewhere around 35,625. And if we take out these highs, then we could be looking at this all-time high, being a possibility of getting tested. So that's basically what we're looking at for the Dow Jones Industrial. And if it's a pullback, then we'd be looking at this 32,272 area here, this pivot low. And here's the New York Stock Exchange Composite, the bond market index. And look at where it closed on Friday, and it's only down 8.64% from the all-time high. So in a sense, all these indexes that we basically been looking at right now, the broadest index it has the most relative strength compared to all the other indexes that we have looked at. So right now, we're essentially looking to see will the New York Composite come back up above this 16,000 and move up to this trend line, possibly come up and test this 16,932. Essentially into the top of this balance area. So we'll keep an eye on it because right now they're still showing a lot of strength in the New York Stock Exchange Composite Index. Looking at the 10-year yield, as you can see that after it had made its major move on this cup and handle pattern, up there, come up above this 3.0%, and it had pulled back to this 2.75 area here. So right now, basically what I'm going to do now, since it already made its major move, I'm going to remove the cup and handle pattern here, and instead we're going to be looking at the Fibonacci retracement and see where the price might pull back to. And now I'm going to put the Fibonacci retracement from this low to the high here to get a gauge of where the potential pullback level might be before we actually see a bounce. So let me put this on and we take a look. So right now, if it pulled back to 38.2, we're basically looking at it somewhere around 2.25%. So we could see the 10-year maybe pull back to the 2.25 before it make another push. We're essentially still looking at a 3.5%. And here on this weekly chart of the US dollar, as you can see, we are getting a little bit of a retracement. So keep an eye on this 101. Wouldn't be surprised to see this 101 and then get a bounce back up because I'm still looking for the dollar to come up to this trend line here somewhere around that 107. And for crude oil, it is continuing to move back up. So still looking at this 130 level here. You can see it came down and got a nice bounce off of this 90 area, and it has been pushing back up ever since then. So right now we're still looking for the possibility of moving back up. Check out this high here, which is somewhere around 126.26. Now silver is getting interesting. Came down to this 20.42 and got a nice bounce off of this. So right now it seems like it might want to go back up and come down, take out this trend line here. So watch for a little bit of a consolidation and a push. And if we get above this 23 level here, this 23.78 area, okay, that might be a nice area to look for some possible long trade location. And here looking at gold, gold remain to be above this trend line here, and it's getting a nice bounce. So just keep an eye on that. If you want a long gold, you might be want to pay attention here for some possible trade location for swing long. Back up to possibly this 2000 level here, 2050, 2078. Now let's take a look at some of the ETF for the SP500, the SPY here. Actually, I have a composite volume profile, and you can see that right now the price is trying to get back into this value area where marked off as a rectangular here. So if it could come back up here, then basically this is a look below and fail, and we could see it come back and retrace all the way up to somewhere around this 455 area. There is a composite point of control just right above the 440 level. So if it come back in and chop around here and stay above that, inside of this balance area, then the target, the first target that we'll be watching for will be somewhere around this 440 level. And then if we get above the point of control, then we're essentially targeting this 445, somewhere near the 445, 443, 50 here on this 618. So it's pretty close to that, 455, 454. And here looking at the QQQ, the ETF for the NASDAQ 100, first thing here is look at this symmetry move. You see the symmetry move here, and that's basically being projected down here as 100%. Right? After it made this symmetry move, it bounced back off, and coming back into this balance area here, I have this composite volume profile. So once again, we're basically looking at the possibility of look below and fail. And if it come back into this balance area and start working its way up, then we'd be looking at the first target level somewhere around this 342 area, the composite point of control here. And then the next level is this composite value area high, which would be somewhere just above this 370 level. So keep an eye on this level here. If we could stay inside of this balance area, then look for the possibility of moving up to this 342 area. And here's the IWM, the Russell 2000 ETF, and that's similarly to the QQQ and the SPY. You can see that it is coming back into this this value area here on this composite volume profile. So we could look at this as a look below and fail if it is able to stay inside of this value area and work itself up. So the target will be somewhere around this 199.50 area here as the first initial target, then work itself back up to this composite value area high near the 220 level. Okay, so those are the upside potential target. Now, if it come back out of this value area, then look forward to work itself back down to possibly retest these lows here, at this 172 and this 170 area. And look at the volume profile chart for the ES, the E-mini S&P 500. As you can see, I intentionally left off the price, so we just focus on the volume profile. And you can see that for this profile here, we see it been balancing in this range, right? In this price range between, somewhere just underneath 3,900 to 4,050. And it's been balancing here. It came down, look above, this right here, essentially look below and fell and then came up. And then now seems like it is looking above. So basically for the coming week, will the price come back down and retest this level here, this balance area, this balance area high here, to see would it be able to bounce off of it to confirm this is a breakout from this balance area, or would it come back in and do a look above and fail and then retrace back down to this 3,900 level. So that is one thing to keep an eye on for the ES or the E-mini S&P 500 for the coming week. And the reason why I'm looking at the ES is because it's also reflect on the S&P 500 and also the SPY, the SPY. Again, if it break above that this balance area here. And then we'd be looking at the next balance area. You can see that would be up here. So if it could, come back down, get a nice test and a back test and then push it back up, then we'd be looking for this thing to possibly push up to somewhere around this 43 level, 4,300 level, because there's also a lot of structure here that need to be repaired. So we're going to take a look at the structure using the market profile. And here's the market profile for the ES, and these pole structure is basically this area here. See a lot of these single prints, right? And also all these single print. And so if the price come up here, then it's most likely will retrace those single print region to kind of backfill it. So again, we're essentially on the volume profile, we're looking at this balance area here. So right now, we might see it to come back in the coming week because there's a pole high here that needs to get resolved. So we could see it come down and possibly do a little bit of a chop and then push up. Or again, basically what I'm saying was, one other possibility is to look above and fail, then it will come back and retrace it back down here. So those are the possible scenario on the E-mini S&P 500 for the coming week. From my previous weekly video, I was indicating there's a possibility, right, that we could see another test of the all-time high. And the reason why I was saying that is that I was saying from all these years, and there's a lot of years behind these years, that I have watched the market and being a student of the market, I have never seen that the New York Stock Exchange Composite Index, that's a broad market index. It's not a weighted index, right? So it's a broad market index of all the stock that are traded in the New York Stock Exchange. It made a new closing high on January the 12th of 2022. And none of the other major indexes like the Dow Jones Transportation, it made a new high, closing high back in November. And the Dow Jones Industrial made a new high early January, at the beginning of January. So did the SP 500. And look at the NASDAQ 100, it was back in November that it made a new closing high. Similarly, the NASDAQ Composite was also back in November. And the Russell 2000 at the beginning of November of 2021. So with that in mind, that is the reason why I suspect that we will see another new all-time high, by not necessarily by the index from the NASDAQ or the Russell 2000, or even might not be the S&P 500. It could be just the Dow Jones Industrial, because one thing that distinguishes the Dow Jones Industrial from the S&P 500 and the NASDAQ 100 is it is not heavily weighted by all those large cap tech stocks, the FANG stock. And also, it is more geared to the industrial and the oil, the financial. So those are the stocks that most likely what we call the flight to safety, the defensive stock. And those are the ones that most likely going to get pushed higher. And those are the ones that will push the Dow Jones Industrial to a record high territory. And when that happens, I expect it will be the only index to hit the new high, not with New York Stock Exchange Composite, when the market is forming a top. It is a process of elimination. It's just like it's getting weaker and weaker and weaker, and when it get up to the top, you only got a few stock is actually making high, but majority of them is already went down. So that's what I call a market top. So don't be mistaken by a new bull market and a market top. And besides, we are not in a bear market on the Dow Jones Industrial or the New York Stock Exchange Composite, and even the S&P 500. It just tagged the 20%, level to that bear market territory temporarily, and it bounced right back. So the only two market that is in a bear market, or three, the Dow Jones Transportation, NASDAQ, Russell 2000. In summary, is this rally a dead cat bounce, or basically is a end of the correction? Looking at the sentiment and also the internal, it seems to tell us that it could be more than just a dead cat bounce. So definitely the market internal and the sentiment is telling us that things are improving. Now, there are people saying that, oh, we still got this rising inflation, the interest rate, the Fed is just starting to raise the rate, and also they're going to start QT soon. But the thing is, those are things that the market is already priced in. So the market have to look forward to what might be happening in the near term. So right now, until something breaks, the market is basically just going to chuck along and just move higher. So be objective and look at what the market is telling us. Don't listen to the talking head and looking at what everyone already know. This inflation news, the interest rate hike, and the QT that's about to start, it is not news. The market is already priced in. Market anticipate on what might happen in the future. Market doesn't react to what has already happened or what it know it will happen. Be objective. Be sure to smash that thumbs up to help me promote this video on YouTube. Thank you for watching and stay safe.